And welcome back to Bitcoin Advisor channel. My name is Chris, bringing it to you here from Westlake Village, California. It is another beautiful day out there. And today is Tuesday, Turnaround Tuesday, or not so much of a turnaround as you can see that girthy red candle in your face right there. And a lot's happened this morning, more like it started yesterday afternoon. The dollar started pulling back. Bitcoin began breaking the ranges we spoke about yesterday on the lower term time frames, which was this. On the CMEs, again, generally going to get the moves pretty clear and cut and dry, but we talked about any kind of a 4-hour closure above 19,500 very likely got us a move up to the 1618 fib, which was coming in right here at 20,170. That target was hit to a T. And here we're getting rejected hard, very similar to what we saw actually in the Fed meeting back over here, if you ask me. And what else did I want to point out here? Basically, when you have these descending triangles and you get a breakout and then a rejection and you break back down below the triangle pivot here, that is a very good indicator that we're going to continue to the downside. And so besides the lower term time frames, we got a lot to talk about on the higher term time frames, which we have been focusing on some time, the 2-day and the 5-day. So we'll go over that in a minute. But more importantly, I just wanted to show what's going on with the dollar. And we did say this, as long as the US dollar held 113, that very, very likely it was going to be onwards and upwards. And when the dollar goes up, it's bad for risk assets. And so this is what happened yesterday afternoon. You know, coming in at 5 o'clock yesterday, we saw a 4-hour closure like this. And then we came down a little bit more. And coincidentally, that's when Bitcoin started to pump. And over the night, had a bit of a sideways action. So what is my point here? Well, I want to look at the higher term time frames for the dollar. And actually came out with some new targets. Let's look at it on the monthly. Our higher term time frames. But what do we see here? A massive descending triangle. And I'm just going to point this out right here. And I'm going to draw it out, in fact. So what do we got here? If we're using candle bodies, we got this guy right here. So this is the opposite of what we saw on Bitcoin. And I'm just going to move this line down here where we got the most action, the most touches to the trend line, and see if we can get a generalized target for the measure move off of this breakout. So essentially what you want to see when a breakout is you come back, you retest the trend line, and then you spring off of it. And that's in fact what the dollar did. However, you can see Bitcoin did the opposite. Well, I'm not going to show that. I'm going to focus on the dollar here. And what do I want to bring our attention to? So if you take the measure move, which is 50% full, 50% full would be right there. And that gives us a target for the breakout quite a bit higher here. My line is not measured up too nice. Let's see if we can line that up with some of the fibs here. If we break this guy out, I actually think this thing should be pointed up towards this region. Let's see if I can get a different measurement on the dollar. Okay, so that 3 touches makes a trend. You got the 3 touches right there. So let's get a measure move on the dollar from the 50 percentile. And yeah, so our breakout target being about 140. After we clear 124, really, I would say the next stop would be all the way up here. And so maybe we could measure this move going back a little bit further, somewhere like this. And that would give us the shot up to about 150. So I do believe if we start closing monthlies above the 100 percentile here, very, very likely we head up to that 1618, and that would be a massive rally for the markets. And that would be in line with the overall opinion that the stock market crashes and, all risk assets take a bit of a beating here until the Fed pivots. And that is kind of my next point here. And so what else happened? The dollar pulled back. Then there was some news that Jerome Powell was going to come out and say something positive about crypto. They had a big central banker meeting. You had every central bank in the world meeting this morning to talk about crypto and stable coins and the future regulations. And I watched the whole meeting. It was like over an hour long. And I watched it while I was at the gym, kind of boring. But what did they say? So in general, what I took from the meeting, what stood out to me the most, is that the Central Bank of Europe is going to launch a digital euro, digital stable coin. Christine Lagarde basically said, hey, China's already doing it and there's so much demand for it. And if we don't do it, we're going to be behind the curve. And essentially, she's just making an excuse. Nobody wants central bank digital currency. Nobody wants it, right? Because it means they can control what you spend, how you spend it. They're going to know where you are, basically know your heartbeat. And it's just further over control. The governments of the world will be able to run their socialist, communist agendas even more easily. She also said, oh, don't worry, Mr. Bankers. We're going to include you in the plan, because she knows, hey, if we go to digital currency, we'll have no use for Visa and MasterCard, no use for banks anymore. So she said, don't worry, banks, we're going to keep you in mind and include them in the plan. The guy from India, I forgot his name, the central banker of India, basically said, Bitcoin has nothing backing it. And there's, so much fraud and so much terrorism going on through cryptocurrency. He just threw mud at it. There was one guy from the BIS, kind of a chunky guy, looked like he came there for a big ham sandwich, and he said there's a lot of innovation around cryptocurrency that kind of we've yet to understand. And what did Powell say? Well, I actually have some comments from Powell up here, and he basically said the same thing he always says: we need more regulation. So Powell said in virtual remarks on the conference, the digital finance conference in Paris, that sharp interest rate increases this year, Powell said, have contributed to the collapse of some stable coins and big drops in the value of cryptocurrencies, a phenomenon some traders have dubbed the crypto winter. Stable coins are digital tokens pegged to the value of traditional financial instruments, often the dollar. Of course, they're going to mention Terra and the $40 billion wipeout. He said higher interest rates have revealed significant structural issues that exist in decentralized finance, more like significant structural problems in the stock market, because the stock market is peeling back as we speak right now. The dollar is rallying. He said there's real need for more appropriate regulation. He said if people are going to think something is money, then it needs to actually have qualities of money. Powell said if it doesn't, then I don't think you want to take money and make it into just another consumer product where sometimes it fails and sometimes it's good. The other thing all the central bankers did seem to agree on is that Bitcoin is not a currency, it's an asset. Ethereum is not a currency, it's an asset. That, I think, is a good thing. And I do believe that they see the need to not badmouth Bitcoin and Ethereum because they are kind of the backbones of cryptocurrency, and there's so much love for cryptocurrency from the people. They know they can't fight it now. They've lost the battle. There's no outlawing it. You know, they basically said it's here to stay. So we got to learn and jump on board and start to understand how digital finance works. So overall, I mean, it was positive about Bitcoin and Ethereum, but, you know, negative in a sense. They're just propagating the digital dollar. Powell also sketched out a cautious path for the United States on the creation of a so-called central bank digital currency or digital dollar. Digital currencies differ from the current forms of electronic money because they would be issued by central banks such as the Fed rather than a bank. More than 100 central banks around the world are considering a digital currency, but just a few have actually issued one. Powell said the Fed is evaluating both the policy issues and technology issues around the dollar. He said, quote, "We have not decided to proceed and we don't see ourselves as making that decision for some time." He said, "We see this as a process of at least a couple of years where we're doing work and building confidence in our analysis and in our ultimate conclusions." Now, I don't trust a word out of his mouth. If Europe's doing it today, China's doing it today, you better bet your bags on the fact that a central bank digital currency is coming sooner than later. And, you know, just as they can change their mind on interest rate policy overnight, well, they can change their mind here. And look at his justification. He said that would put the United States behind many other countries when it comes to central bank digital currency. China has already tested a digital yuan in some provinces. Powell also said the Fed would need approval from the White House and Congress to proceed with a digital dollar. And then Christine Lagarde, president of European Central Bank, also spoke virtually on the conference, said the ECB plans to decide within a year whether to start developing a prototype of a digital euro. I think that was fudge, Mark. She basically said, we're doing it. And quote, if we're not in the game, if we are not involved in experimenting, in innovating in terms of digital central bank money, we risk losing the role of anchor that we have played for many, many decades. The Central Bank of Europe is a bunch of garbage and they haven't anchored anything. You know, they're as much of crooks as the Fed is out here in the United States, and we all know it. So, yeah, get ready for digital currency. So, there was some idea around this. Oh, Powell's going to say something good about crypto. No, that didn't happen. Here is, I think, what, you know, generally caused the markets to pump a little bit today. Well, here's the real reason, right? The dollar came down, and as the dollar reversed to the upside, you know, Bitcoin got smacked back down. So I'm just revealing some new targets on the dollar. For a longer term perspective, is this going to happen overnight? No, but I do believe if we start closing dailies, more importantly weeklies, above that 124 target that we do have outlined, then the next target in place is going to be that 150 mark. And just take a look at this. 1985, the dollar peaked. Do you know what the stock market did from 1980 to 1985? Well, just go. Let's look. Let's look at that S&P. Where'd he go? Where's my SPX? Oddly enough, speaking of the Shmita and whatnot. Okay. So from 1980 to 1982, stock market fell. And this was the Paul Volcker days, right? That was 2 years of down. Stock market fell 28%, not bad. Not too bad. That's where we're at right now, down about 30% in stocks. And then by 1985, so hey, maybe this could be good for the dollar. By 1985, we're already making new all-time highs and had rallied as the dollar was skyrocketing. But remember, this was a different time back then. They had just taken us off the gold standard. We began on the petrodollar. If I had to get something, we're more closely in alignment with this area right here in stock market history. bouncing off the green 55 on the monthly time frame. Let's see if that lines up here. Oh, look, what do you know? Green 55 on the monthly. It looks like we're heading down there too. And we just took out the low on the S&P, which everybody's been watching that guy from the June low. And you can more clearly see it on the daily time frame, which we are going to close today with a bearish engulfing candle, implying continuation to the downside. So again, the things we keep our eyes on here at Bitcoin Advisors, we're looking at all the stock markets, NASDAQ, S&P, the Dow, and Dixie, very, very important. But getting back into our Bitcoin analysis and how does this play into the bigger picture here? And here's what I would say, starting it off with the weekly time frame. Actually, I want to put this on a weekly. I'm going to use my clean chart here. Nope, that's not the clean one. Okay. So just notice here, guys. I don't want those. Just notice here, this trend line is holding true. And as long as it does, Bitcoin remains with downside posturing. Very, very strong downside posturing. Downtrend is in full force on the weekly time frame, which typically can get you, 6 to 12 months of down. We'd be going into about our first 12 months. So, 12 to 18 months of down, 24 months of down and sideways. That's typically how it goes when you get into a weekly down trend. So, what else did I want to bring up here? Okay. Notice this as well, is that the weekly Stokes will not cross up unless we're above 19,410 by the end of the week. We've got 5 more days left, so plenty of time here. We could get a bounce. If Stokes do cross up by the end of this week, volatility increases, I would expect a big bounce to the upside. But as long as that is to the downside, and the 5-day, which we've been talking about for some time, the 5-day momentum volatility indicator, again, as we began expansion above the 20 percentile right here, the average move down is 42%, which I will just bring this chart up again because we already have it marked off on the 5-day time frame. Volatility expansion began right here on this candle. So if the average move is going to be down because momentum is down and will remain down as long as we close today below 1914. So earlier today, Bitcoin was at 20,200. Wasn't looking so likely. But then what happened? It was a big pump and dump. There was no reason for the market to be rallying. That's what I was telling all my guys here, is that, look, we will remain with the downside bias as long as this thing is crossed to the downside, and ultimately targeting that move. And again, that move won't fully be ticked off in my book until we get below that 17,500 pick. That would be the June low from the Luna dump cycle, but 42% down gets you to 11,500. Okay, that is based off of the 5-day signal. Now, what else do we have on the board? The 2-day signal. The 2-day downside move, the average move down, is about 39%. And we will remain crossed down as long as we are closing today in 5 hours and 46 minutes below 19,000, call it 700. Or 19,700. Yep, so we're well below now. We were actually crossed back up earlier today. Bit of a fake out, and that's usually what I notice before the big moves down, is you have a bit of a big fake out. That is kind of what happens. So here's, again, from the volatility read, the signal given. We had the cross down, volatility just above 20 percentile right here on this candle. So let's take 39% off of this target. And that would put you at about 12,000 bucks. Let's check in on CMEs for the same signals. So CMEs, did we cross? Yeah, we crossed. And that was also my bias yesterday, as we did cross down yesterday with that closure, the 2-day close for CMEs yesterday like this. This was the 2-day closure, a little bit of a doji candle at 19.2. And we said as long as that closed below 19.4, that would remain with the downside bias. Volatility is about to expand. And when the expansion occurs, that's when the move is in effect on board. Next things next. So we talked about the 2-day, the 5-day, and honestly, okay, let's get into the short-term time frame trading if you are trading off of a 4-hour. So generally, I would call this a fake out. And because there is quite a bit of leverage in the market, and that's the other thing we take a look at is the open interest. That is all the leverage positions on the board. Quite a bit of leverage right now. And when leverage gets way up there, and I'm talking way up there, not way up there, but we said leverage around, so the leverage is going to be the purple line, the open interest. So leverage ratio doesn't look that high. Am I mistaken here? I was looking at another chart this morning. I don't have time to bring it up right now, but leverage did go up significantly on this chart. I'm looking at open interest. Let's take a look at the leverage ratio. So leverage ratio still not nearly as high as when we were at 22K. So maybe this is a bad example. I might have to cover it tomorrow. But in general, when leverage gets up, when open interest gets up around 11 to 12 billion, that's typically when you'll see those 25% corrections. Let's look at the funding rates. Funding rates, that's what I want, not leverage ratio. So right now we are sitting at not 1. So let's look at the all-time here. So when you start to see leverage ratio get about 0.1%, that is when you're going to see kind of corrections coming from either side. So in this region, it is costing you to go long, and in this region, it's costing you to go short. So right now, still longs are paying shorts, and that is interesting on my end, but no, relatively high readings right now, so not anything to really worry about in my opinion. Not 1%. Yep. Anyways, that's it for that. And I would just say this, unless we can get back above 19,500, I remain with the downside bias, even in the short term. You got Stokes crossing down, volatility is really hot, relatively high. And a whole slew of bearish divergence drives 1, 2, 3, 4, at least gives you a shot to the bottom side of the range. I would be looking for Bitcoin to come back down to that 18.5 region, 18,300. If we begin to lose at that region, even on a 4-hour time frame, Really the next shot down. Let's take a look. Now we can get a little bit of a different look here for a downside move. No, it's very similar. So 17.5, 17.6 would be the area I would be looking if we lose 18.5 on a 4 hour. Okay. Let's take a look at the 1 hour. So 1 hour volatility is getting maxed out, and 1 hour volatility getting maxed out. Do we have any bullish divergence coming back from this point? We do, and from this point we do. But really I would use this clear stop and reverse point and say, look, we are just at the 786. If we break below that, next level down is 18.5 on CMEs. All right, that's enough for Bitcoin, long-term, short-term. Gave you all the targets, gave you the invalidation point is back above 19,500 on a 4 hour. What else did I want to talk about? Ethereum. So as Bitcoin does rule the market, I'm just going to point out something here on the 6 hour. We'll cross, oh, we just crossed down. So big fake out, big pump fake. And again, the same principle applies here. We have this descending triangle. I believe it was drawn out like this. Let's see. Yep, that works right there. And so we're coming back down right now to test this bottom side of the triangle. And I would say if we do break back below 1,285 on a 4 hour, that's going to look good for a run to the bottom side of the range at 1242. You can see on the 6 hour here, we're just crossing down. Volatility has not maxed out. And if volatility gets above the 50 percentile and we do break the range with a little bit of follow through, that would be a clear indication that we're going to hit that 1240 target. And ultimately, I'll just bring up again the 2 day and the 5 day as well. 2 day crosses up above $1,300. We're sitting on that right now. We'll remain down if we, close today below 1303. And so the 2 day is down, volatility is up. And the 5 day, the big one. We're just getting the volatility metric above the exponential. And we are playing out a few drives of bearish divergence, 1, 2. And that should get us a minimum move back down to $1,000 for Ethereum. And that will remain crossed down as long as Ethereum is closing below 1,633. So I imagine, Ethereum will follow in concert with the rest of these animals here, or with the big animal, the big elephant in the room, Bitcoin, taking it on the chin here after a big pump out fake, a big pump fake. What else I want to take a look at on XRP? I don't know if I mentioned this in the video yesterday, but I'm pretty sure I did. And I mentioned this death cross, and typically that's exactly what you want to see, despite all the rhetoric online, live streams from Brad Garlinghouse. And, these coins are going to do whatever Bitcoin does, but more to the upside and the downside. And we're down 6% on Ethereum. I also mentioned Ape, and Mr. Ape remaining on with the downtrend. We had a chance to get a higher low and a higher high, but we did not get the additional higher low. In fact, we got a lower low, and now what seems to be a higher high that would be confirmed by taking out this wick at 491. I do imagine if Bitcoin comes down, well, this guy's going to get kicked in the teeth as well. And another one we've been talking about, Ethereum Classic, looking for this guy to extend its move. All we got to do is see volatility begin to expand, and this is a relatively low region for expansion. I would expect the move to be big to the downside on this guy. And again, these are going to do whatever Bitcoin does. And notice we had the breakdown and the retest. So where does invalidation come? On the 5-day time frame, well, let's say we get a bounce from here. It's above the 618 at 34.21. If we do start closing even a 2-day above there, even a daily above there, and I would be looking for this one head to back to the top side of the range at a minimum. So big rejections on all the major coins, and I do want to peek at Mr. Cardano. How's Cardano? And it's just so funny to hear all these other channels pumping these coins like the merge is going to save the day. I believe Cardano just had a similar type of event. And where's our target on Cardano? Cardano, 30 cents. And I would mediate that with any kind of a, aggressive traders will take a daily closure below there. A conservative trader waiting for a daily below 40 cents, looking for a nice move down to 30 cents. That could be a big one. And what does the 2-day and the 5-day say? Yeah, 2 days down, volatility is expanding, will close tonight and remain down below 48 cents. And the 3-day, same thing. 5-day, higher term time frames are going to rule the market. Volatility is just beginning to increase. And with any kind of a closure below 46 cents, this thing is very likely going to play out the bearish divergence. You got 2 drives, gets you a shot to the bottom side of the range at a minimum. I'd be looking for that to happen. All right, that's it for today, guys. Hope you have a blessed, highly favored day. We'll I'll be bringing back some more TA for you guys tomorrow. Please go ahead and like the video if you got something out of it. If you didn't, don't like the video. And subscribe if you want to get the most recent updates. I try and put out a video every day covering all the markets. And yeah, do we want to check on gold just really quick? Gold and silver. My old best friends here. Oh, they're not on the chart right now. So I'm going to leave you off with that, but I do imagine gold and silver probably heading down as the dollar's going up. All right, take care.